So this model says that Bitcoin should be worth about $100,000 today. In a couple of years, it should be worth $1 million of Bitcoin. And around 2030, it should be worth about $10 million of Bitcoin based on the stock to flow model. And this model is very, very accurate. It's 94% correlated to the historical price of Bitcoin.
Welcome back, visionaries. Ash Bennington here. We continue the Crypto Week as part of Real Vision's Education Month. As Raul says, don't F this up. So we're here to help. With that said, today for an investor masterclass, we're joined by Brian Estes, CIO and CEO of Off the Chain Capital. Brian, welcome back to Real Vision.
Hey, Ash, good to be here.
Brian, we're thrilled to have you. I have to tell you, a couple of weeks ago when we were doing our scheduling for this Education Month, I was asked, listen, if we had to bring in one person to do an education on crypto, on Bitcoin, who would it be? You were literally the first name that jumped to mind. I know you've been doing this presentation at universities, literally all over the world. We're so thrilled to have you back with us to join us for this month.
I really appreciate that. Thank you.
Well, it's great to have you. So with that said, give us a little bit of the context of this presentation that you do. Tell us a little bit about why you developed it and where you've been doing it over the last few years.
Mm-hmm. Yeah, so basically I call this my Bitcoin 101 class, so the introduction to Bitcoin. And we really have to start out with like, what is money? We have to define what money is first before we understand what Bitcoin is. And I teach these at my alma mater. So I got my MBA at Washington University at the Olin Business School, and I did my study abroad when I was an undergrad at Cambridge University. So I teach this as a guest lecturer over at the Judge Business School at Cambridge, at the University of Cambridge. So I've been teaching this for about 5 years now, I think. So it's it's fun to do. It kind of opens the eyes to people who want to understand more about what Bitcoin is and why it's so important to the world.
Yeah. With that said, Brian, I'll let you jump right in.
Okay. Well, thanks, Ash. And now I want to make this an interactive conversation. So when you have questions, jump in, and if you disagree with something, or you want to push back or dive deeper, just tell me, ask the question. Let's take a deeper dive into this.
And I should also add that we're doing this live right now. So if you have questions in the audience, please submit them to me, and I will ask Brian those questions at the end of that presentation.
Okay, so I just want to welcome everybody. Just by way of background, I'm the CIO of Off the Chain Capital. We're a private investment fund started in 2016. We're a value manager in the blockchain space, but I've been in Bitcoin and blockchain and helping building blockchain companies for the past 10 years. Started this in this industry back in 2014. Prior to that, for the 23 years prior to that, I was in traditional asset management. I was an institutional equity broker for a company called A.G. Edwards and Sons. And then I ran my own firm for 10 years as an institutional asset manager for endowments and foundations as their outsourced CIO. And when I first learned about Bitcoin in 2014, like most people, I thought it was a total scam. I thought it was this internet funny money that, it was maybe a pump and dump scheme. But after I dove into it to figure it out, which took me about 6 months to figure it out, I became a pretty strong believer that the future of finance is based on blockchain technology. And this is, one of the most important inventions ever in the history of the world. And that, we just need to sit down and take the time to understand what this is so that, we can make the world a better place. And I strongly believe that Bitcoin and blockchain technology will, make the world better over the long run. And so if you want to go to the next slide, I always start with this one, this 1984 Apple Think Different slide. And the reason I throw this in there is that, coming from traditional finance, I was used to valuing companies like on a PE ratio or a price to book, or valuing bonds on credit risk or interest rates. But with blockchain technology and Bitcoin, you have to think differently about these. These are different technologies, different types of investments than traditional stocks and bonds. So what I ask my students to do, and what I ask the audience to do here, is just open up your mind for the next 30 minutes as we go through these slides, just so that you come in with an open, fresh mind, and you're not constrained by dogma, or constrained by what people have told you for the past 20, 30, 40 years. So if we go to the agenda here, basically we're going to talk about the history of money, just the basic, not too deep, but just basic history of money. Bitcoin as an innovation and invention. Why does Bitcoin have value? Like it's just internet software, right? Why does that have value? So we're going to dive into that. Why add Bitcoin to a diversified investment portfolio is something that's really important. We'll go through our models that we use to value Bitcoin, and we'll cover some of the risk and regulations around Bitcoin. So we'll start off with like, what is money? And so, if we think about it, like, I'm not talking about like like US dollars are currency. We use those to do financial transactions. But the core question is like, what is money? Like, money is different than currency. And most people, don't think about that. But that's we need to dive into like, what is money. So if we go into the next slide, we'll just talk about like the history of money and how it started. So back thousands of years ago, we as humans, we lived in tribes of anywhere from 50 to 200 people. And in these tribes, we would use what would be like a scarce commodity that was in that local area. And that would default to our money. So like the American Indians and the Indians in Canada, North America, they used wampum as their money. And what wampum is, they're like, shells, and they would be polished up, and then, drill a hole through them, and you put them on a string, and you could wear them. And it took time and effort and proof of work to create that wampum. And so, different communities around the world, use different types of money. So some were shells, some were stones, some was salt. And that's what we used for thousands of years. And then, gold was discovered as a way to preserve value. And gold took off as a new form of money because it was universal. People in India, people in Africa, people in the North American continent, we all knew what gold was. It was fungible. It was hard to transport, but it was a good store of value. And then we started using gold coins. We were able to take that gold and turn it into gold coins. And then about 1,000 years ago, in the 11th century, the Chinese invented paper money. And paper money was basically, people would deposit the gold into a depository, and then they would issue out paper certificates redeemable for that gold. And so that paper money was new technology because it was more portable than hauling big bags of gold around. And so that paper money 1,000 years ago was like the new invention. And then about 560 years ago, the Medici family over in Italy started using what's called double entry bookkeeping. And double entry bookkeeping is what was used to allow banks to be created. Banks, the bond market, and then eventually credit cards as we know them today. And that's using what's called double entry bookkeeping. And Bitcoin is basically the same thing as double entry bookkeeping with a little twist to it. So all Bitcoin is, it's the same ledger technology we've been using for 500 years, that double entry bookkeeping technology, with a little twist. And that little twist is that ledger is one universal ledger, and it's distributed around the world and updated about every 10 minutes. And that's what that allows Bitcoin to have the safety and security that it has, is because since we're all using the same ledger and it's secure and it's updated every 10 minutes, you can't cheat. You can't cheat the Bitcoin ledger. And whereas if you have an account at Bank of America and Ash has an account at JP Morgan has their own ledger, Bank of America has their own ledger. And if I move money from Bank of America to JP Morgan, those two ledgers have to interact with each other and they have to reconcile, and then they settle the transaction. Well, with the Bitcoin network, there's no reconciliation because it's just one ledger. And we're all using the same information. And that's why Bitcoin's so important, because, if, someone goes into the JP Morgan or the Bank of America database and changes the ledger, then, there's fraud that can happen. And that's why we have auditors. The CPAs and the auditors have to go in and verify the transactions are true. Whereas the Bitcoin network, you don't need an auditor. The software self audits itself because like I said, settles every 10 minutes, or it's updated every 10 minutes, and it clears the transaction. So it's just a better form of money. In fact, it's the best form of money humans have ever created because of that.
Hey everyone, have you yet checked out the incredible, groundbreaking new Real Vision platform? See, we've built something that allows you to live your financial life in one place. We bring together the knowledge, tools, and network to help you thrive in your financial journey. We've got AI tools to help expand your knowledge. We've got courses and education. We've got note-taking. We've got pricing and charting. And in addition, we've got obviously the world's best content, both on macro and crypto, to bring everything together. And in addition, you get access to the Real Vision network. That's our tens of thousands of members across the world where you can connect and chat to them about what really matters to you. Anyway, it's free, realvision.com. We'll see you there.
This is just another, graphic of how money started. For 10,000 years, we as humans used gel, salt, and stones, and then gold for about 3,000 years. And then, these banknotes or depository notes for 1,000 years. And then 560 years ago, the Medici family invented the double entry bookkeeping. And when I say invented, they're the ones that promoted it. The invention of double entry bookkeeping actually traces back to Leonardo da Vinci and a couple other people, but it was the Medici family that pushed it and created the banks back then. And then about 53 years ago, we started a new form of money, and this is called fiat money. And so fiat means by decree. And so what happened in 1971 is that President Nixon severed the tie between the US dollar and gold. So prior to 1971, the US dollar was backed by gold. And then Nixon said, we're not going to honor that anymore. We're going to sever the tie between gold and dollars. And so for the past 53 years, the United States and the rest of the world has been running an experiment. And this experiment is failing. In my opinion, what's going to happen is that we as humans will say this fiat system is not working for us. And for most people, it's not, because as the governments print more and more money, it dilutes the purchasing power of the existing money. And that means you have to use more diluted dollars to pay for the same thing. And that's why prices keep going up. And so for most people, that's not working out for them very well. So in my opinion, what's going to happen is we as the world will decide to go back to a commodity-based financial system like we used for the last 10,000 years. And since Bitcoin is the best form of money humans have ever created, I think that's what we go. That will be the new money. That will be the new monetary system for the world. And we're not going to go back to a gold system, and I don't think we're going back to shell, salt, or stones either. But I think the new money, in the future will be Bitcoin. And right now, only about 1% of the world understands that. But as the 99% of the rest of the world starts to understand that Bitcoin's the best form of money, then we'll just naturally default into it. There's nothing we could do to speed it up. There's nothing governments could do to stop it. It's just to be a natural progression of human activity that will just, take some of our fiat dollars, convert those into Bitcoin. And as people do that over the next 5, 10, 20, 30, 50, 100 years, eventually the world will be on a Bitcoin standard.
And Brian, that belief that you have is based on the thesis that the fundamental attributes of Bitcoin are just better money in your view, and therefore manage to crowd out or just pull additional resources away from those other forms of money as you see it?
Right. We as humans always default into the best form of money. So, back in, 100 years ago when the Indians were using wampum, the reason that failed is that John Jacob Astor, who was one of the wealthiest people in the world back then, he figured out a way to create wampum type shells mechanically. And so instead of taking time and effort and hard work to create them by hand, he was able to mass produce these. So he was able to create basically money, because when he took those and went up to Canada and did his fur trade, that was his first business, was fur trading. He was fur trading with these machine made wampum shells. And so he was basically counterfeiting money. And that's how he created all his wealth at the very beginning, before he got into the opium trade, which was another story. But
It's
but
really
yeah,
it's interesting to me when you were talking about wampum at the beginning, you used the phrase proof of work. I'd never really thought of it that way, but it's fascinating that the idea of drilling the holes represents the proof of the time that was put into doing that mechanically.
And all sorts of other, communities around the world had different sorts of proof of work type money. And so, it's, in the South, tobacco was money for a long time. They issued out tobacco bonds, which were backed by the, the storage of tobacco in warehouses. So, and these tobacco certificates were used as money. So, yeah. So, people around the world use different forms of money, but then, like I said, gold was the standard form of money starting about 3,000 years ago. And because it was, hard to dig out of the ground and make, it took a lot of proof of work to create gold. Gold and silver defaulted to our monetary system, worldwide. But like I said, what my belief is now is, Bitcoin is better than gold because it's more divisible than gold. It's more portable than gold, and you could verify it easier than gold. And so I think because of those three things, Bitcoin is a better version of gold, and that we as humans will default into a Bitcoin system because it's better than gold. Okay, so if we go to the next slide here, the characteristics of money that make it important are, money has to be durable, has to be portable, divisible, and of limited supply. It's that limited supply that's the most important, in my opinion. And if you go to the next slide, if we look at the British pound, for example, the history of the British pound goes all the way back to 757 AD. And the king back then, invented the British pound. And what it was 16 ounces of pure silver that was divided into 240 shillings. And so it was a pound of silver. That's where the British pound comes from. It was 16 ounces of silver. And then over time, kings kept diluting the amount of silver that was in a pound by adding, tin and other elements into the coins. And so over time, the silver kept getting diluted. And the reason they would do that is because they would keep the difference. Instead of taxing their people, well, if we could take one 16 ounce, pound and put in 8 ounces or another 16 ounces of tin, we could make two coins, right? One is 50% silver, 50% tin, and the other one's 50% silver, 50% tin. Now we got two coins instead of one. And so they just kept diluting the amount of silver that was in a pound. And so if you look at what's in a pound today, 1 pound of silver costs about 288 pounds. So, it should be one, right? But it costs 288. So if you take 1 divided by 288, what's in there is 0.00345 ounces of silver. So it's just been completely diluted over the past 1,500 years. So, and this is the oldest surviving currency that's out there. British pounds aren't the only ones that do that. If you look at the next screen, or next slide, the US government does the same thing with dollars. Over the past 3 years, 2.5 years, I need to update the slide. So the past 3 years, the US government has printed 40% more US dollars than ever been in existence. And so what that means is that if you had $1,000 in your bank account 3 years ago, you could only buy $600 worth of goods today because the money's been diluted, just like the silver was diluted out of the pound. The purchasing power of the dollars have been diluted because the government's printing more and more money. And so this is what Bitcoin fixes. Because you can't print more Bitcoin, there's a finite supply of 21 million, then it fixes that problem of governments diluting their currency, which harms us as the people who use that currency. We use this currency as to store our values. We go out and we spend our time and our energy to create value. We get a paycheck for spending our time and energy. And we get that paycheck, and you hold that paycheck in dollars, it gets diluted over time because the government keeps printing more and more of them. And so we have to take those dollars and put them in places to protect them. And so the best place, like I said, in my opinion, to protect your purchasing power is to keep it in Bitcoin. So if we go to the next slide, this technology, before it was invented, it was identified as a problem, that needed to be fixed. So Milton Friedman, back in 1999, said that what's missing in the internet was an e-cash system for person A to transfer money to person B through the internet without those two people knowing each other. So we knew that when we built the internet, it was built incorrectly. And so what I mean by that is back in 1992, when we took the ARPANET and turned it into the World Wide Web, what was missing was the software to allow us to do financial transactions through the internet. No one could figure out how to send money through the internet without double spending it. So what we did was we built the internet on top of the existing banking and credit card system, but it wasn't supposed to be built like that. When we discovered email or invented email, that's a peer-to-peer system. I could send data to Ash, and he could send data to me through the internet, through the email system. And we don't need permission to do that. We just send data back and forth. But but with that, we could copy and paste that data. But you can't do that with money. And no one could figure out how to send money through the internet without having a trusted third party verify that transaction. And that's what was missing until blockchain technology was invented about 15 years ago. So if you take a look at the next slide with PayPal. So Elon Musk, Peter Thiel, and Luke Nosek were co-founders of PayPal. PayPal's original mission back in 1998 was to create Bitcoin. They wanted to create the software that created a global currency where it was independent of banks and governments that were debasing the currency. And they tried for about a year to create this software, and they couldn't figure out how to do it either. I talked with Peter Thiel at the Bitcoin conference about 2 years ago, and I asked him, I was like, so what was the main barrier? Like, what could you solve for? And he said it was the decentralization. He said they had it all figured out except how to decentralize it, because if PayPal would have launched that software, the government would have just come in and shut down PayPal. Said, well, you can't have your own currency. We're shutting you down. And the government has a history of shutting down like e-gold and e-cash and other types of systems because they were centralized. But because Bitcoin is a decentralized system, it can't be shut down and it can't be stopped. What governments are doing, though, is that they're trying to slow it down. They say it's used for nefarious activity. It's used to fund Hamas. It's bad for the environment. You're a criminal if you're participating in this Bitcoin ecosystem. So they're trying to convince people not to use it because they know they can't stop it. And I just all the information that they put out, it's mostly just I call it FUD. fear, uncertainty, and doubt, but it's just they're lying to us. They're telling us things that aren't true. So if we go to the next slide, Mark Andreessen. So Mark and I went to University of Illinois together when we were undergrads. He was about 2 years younger than I was. Back then, I was taking a lot of CS classes. I was a coder starting when I was 14, back in the early 80s. And Mark, he's the one that invented. He started Netscape when he graduated from college. He took the Mosaic software that he developed when he was at University of Illinois, and he created Netscape, which is the first internet browser. But what Mark says today is that blockchain is the most important technology since the internet itself. And the reason he says that is because 30 years ago, when he started Netscape, Netscape was trying to solve the problem too. How do we send money through the internet? And they couldn't figure out how to do that either. And so they invented other types of software that allows us to clear transactions through banks. So if we go to the next slide, so what is the Bitcoin blockchain? Just simply put, what is this? It's open source internet protocol software. So those are a lot of words, but so what is open source internet protocol software? It's stuff we use every day. So when you send an email, you're using what's called SMTP, Simple Mail Transfer Protocol. That's open source internet protocol software. When you register a domain name, that's open source internet protocol software. When you make a phone call using voice over internet protocol, VoIP, that's open source internet protocol software. We use this software every day, and that's all Bitcoin is. It's another version of open source internet protocol software. And why is this software so important? Is because it solved that double spend problem. It solved the problem of when we send money through the internet, electronically, I can't copy and paste that same dollar and send it to someone else. And that's what it solved. That's the problem that couldn't be solved 30 years ago. That Satoshi Nakamoto solved. And 15 years ago, he gave the software to the world for free. He said, here's my gift to the world. I figured out that problem we've been all working on for 30 years, and here it is. And so how does this software work? What it is, like we talked about a while ago, it's a public ledger using, basically double entry bookkeeping. It's a public ledger that's distributed around the world, and it's updated every 10 minutes. And what this software does, it enables the peer-to-peer transfer of value through the internet without having a bank or a Visa or a PayPal verify or clear that transaction. It's a direct peer-to-peer transaction through the internet that no one could stop or block, just like they can't stop or block our emails when we send those to each other. Ash, you got any questions before we move on?
I'm just hanging back.
Okay.
Obviously, really interesting from the framework of, one of the challenges I think with understanding Bitcoin is that it requires sort of very sophisticated knowledge about the way finance and macroeconomics work on the one hand, and then on the other, obviously, I can see the next slide. I don't know if it's on the screen yet, but you're looking at this suite of protocol software here. So a pretty sophisticated understanding of the way networking technology works. I mean, all of these technologies that we use, we're having this call right now over Skype, all based on things like TCP/IP and the protocols that underlie the internet. And the kind of really cool thing about it is that you don't have to think about TCP/IP to have a Skype call. You just open the application in your browser, you connect with someone else, and the phone call or video call takes place. In many ways, I think that's sort of analogous to what we're talking about with Bitcoin. You don't actually need to understand the underlying technology or the underlying cryptography behind the technology in order to use it. But again, these are metaphors that we use. Probably none of them are perfect, to just try and get our head around what's happening here, particularly for people who are relatively new to the space.
Mm-hmm. So one of the questions I often get is what is Bit like? Why does it have value? Like, why would someone buy a Bitcoin, right? Or buy a piece of a Bitcoin? And the best way to explain this, why Bitcoin has value, think of domain names. So the DNS system, the domain name system, 30 years ago, domain names, you could buy like very popular domain names when the internet started, like Nike.com or Coca-Cola.com or, Mike.com for like $30. Well, why were those domain names only $30? Because there were only a few million people using the internet 30 years ago, right? So these domain names were, they didn't have a lot of value because there weren't very many people using the internet. Well, think about Bitcoin the same way. There's only about 300 million people in the world that use Bitcoin today. Bitcoin are like domain names. There's a limited supply. There's only one Amazon.com. There's only a limited supply of Bitcoin. And as more and more people use the Bitcoin network, the network becomes more valuable. Just like domain names became more valuable over the last 30 years. And so Michael Saylor, who's very prominent person in the Bitcoin space today, 30 years ago, he was buying up domain names. He was buying Mike.com, Michael.com, Strategy.com, Voice.com. He bought Hope.com. He sold Voice.com a couple of years ago for $30 million. Well, why did it go from $30 to $30 million in 30 years? Well, it's because when he bought it, there were only like a couple million people use the internet, and now there are billions of people using the internet. So that one Voice.com, there's only one of those. It became more valuable. And you could think about Bitcoin the same way. As more and more people use the Bitcoin network, it's going to become more valuable over time. Using what's called Metcalfe's law. That's how you value networks. Okay, so let's go to the next slide. So these are basic Bitcoin economics. So economics 101 for Bitcoin. So the supply of Bitcoin is fixed at 21 million. The issuance of Bitcoin and how Bitcoin gets created, it's on a predetermined software, algorithm. And so when it started, it was 50 Bitcoin every 10 minutes. And then it got cut in half to 25 Bitcoin every 10 minutes. And that halving is every 210,000 blocks. And it takes about 10 minutes to create a block. So 210,000 times 10 minutes is about every 4 years. So about every 4 years, the supply, the reward that gets sent out to the people who clear the transactions on that work, that reward gets cut in half. So it went from 50 to 25 to 12 and a half. Right now it's 6.25 Bitcoin rewards every 10 minutes, which is about 900 Bitcoin a day. And then in April, it's going to get cut in half again, to 3 1/8. And then in 2028, it's going to get cut in half again. And that's why I keep happening. There's going to be 32 of those halvings until all the Bitcoin's created. Okay. So right now there's been 19.6 million Bitcoin created and rewarded out to the people clearing the transactions out of the 21 million. So 93% of all the Bitcoin that can be created has already been created. It's going to take about 120 years to create that last 7%. So that's the supply of Bitcoin. If we look at the demand of Bitcoin, and a good way to do this is look at the number of Bitcoin wallet addresses. Bitcoin wallet addresses since 2012 have been growing at around 60% a year. And so if you have the number of demand going up at 60% a year, and you have the supply decreasing, the only other variable is the price. And that's why the price goes up. It's just simple supply demand economics. Limited supply, more demand, price goes up. Okay, if we go to the next slide. If we compare the Bitcoin adoption to the internet adoption back in the 90s, crypto and Bitcoin adoption is actually growing faster than the internet adoption did back in the 90s. And it's projected there'll be about 4 billion Bitcoin and blockchain users in about 6 more years. And so, this is what's called a mega trend. This can't be stopped. It's for certain, and it's just a matter of time before billions of people are using this technology worldwide. And then, Ash, we're going to get to your favorite on the next slide, the S curve. So we've talked about this before, but basically what we look at with S curve analysis is that the amount of time it takes for a new technology to go from 0% adoption to 10% adoption is the same amount of time it takes to go from 10% to 90% adoption. And when you're up about halfway through that adoption cycle, that's when you get the washout. That's when the unproductive, useless, the technologies that, or the companies that have no utility, they just disappear. And the ones that survive are the ones that provide utility, provide value, that have good business models. And so we saw FTX disappear last year. We saw BlockFi disappear. We saw Celsius disappear. We saw Genesis disappear. These business models didn't work. These buy Bitcoin and lend it out business models did not work. So what's left are the survivors. And so, we're going to go from 50% adoption up to 90% adoption by 2030. And this is just here in the United States. And we're looking at households. So the Biden administration put out a study, I guess it was about a year and a half ago, maybe 2 years ago now. And it showed that 41 million Americans owned Bitcoin. And like I said, that was a couple of years ago, and that was based on data that was a year old. And so we're looking at households, and our data shows that about half of U.S. households have exposure to Bitcoin today, and in 2030 it's going to be 90%. And this is part of that mega trend. We went from 0% to 10%, we're at 50%, and we're going to 90%. And this mega trend can't be stopped. If we take a look at the next slide with Bitcoin and think of it as a payment network, it's important to show how does Bitcoin compare to other payment networks? So if we compare it to Visa, MasterCard, American Express, and Discover, you can see that, and this data is a little bit stale. So this is through 2022. We're still working on our 2023 numbers. But Visa processed about $14 trillion of transactions in 2022, MasterCard 8 trillion, and Bitcoin 4 trillion. Bitcoin is growing a lot faster than Visa and MasterCard. Those are 60-year-old legacy systems that are growing at 2% a year. Bitcoin's adoption is growing much faster than that. And so it's projected that in about 2 years, Bitcoin's going to be bigger than MasterCard. And in about 4 years, it's going to be bigger than Visa. And so this is another one of those trends that can't be stopped. And I think that Bitcoin eventually becomes the largest payment network in the world.
Do you think that happens, Brian, exclusively on Bitcoin as a layer 1 network, or are you including some of the layer 2 technologies like Lightning on top of it?
Yeah, and Bitcoin can't scale up on layer 1. So the problem with the primary layer, the layer 1 network of Bitcoin, is that it's expensive and it's slow. So, there's only, transactions are costing, anywhere from $10 to $75 now to move money through the Bitcoin network. So it's just, it's not the primary layer won't be the transaction layer. It's going to be the primary settlement layer. But what will be built on top of that are Lightning. Most people don't realize, but Venmo's a blockchain application that PayPal bought 6 years ago. And so, Venmo could be easily integrated into the Bitcoin blockchain. So yeah, there'll be these other layers that will be our primary transaction layers, and then they'll settle to the Bitcoin primary layer.
It's interesting, Brian. I think about it as a series of trade-offs for like Venmo, for example. I think is capped at $9,999 right now, and that there was some stories that came out a number of years ago about how that was being done in a way that could essentially be reversed if someone repudiated the transaction because it's not done on Fedwire, it's done on ACH, et cetera. But my feeling on that is look, if you go out to dinner with someone and they Venmo you $50 or $100 and they reverse the transaction, I probably just don't go out to dinner with them anymore, right? It's not
Right.
like, it's not going to be devastating to me. But very different if you're selling a house. So kind of different use case, different technology, different layer, how I think about it, at least.
Yeah, no, you're 100% right. And if we go back to or you look at that Visa, MasterCard, Bitcoin slide, the thing that really stands out is the average transaction size, right? So the average transaction for Visa, MasterCard are like $73 and $55, but for Bitcoin, it's like $51,000. So if you're paying $50 to settle a $51,000 transaction, yeah, it's not that big of a deal. But if you're paying $50 to settle a $3 coffee transaction, yeah, it turns into a big deal. So, so Bitcoin's going to be used for big purchases. And like I said, as the primary settlement layer. And I think eventually what happens is that it becomes the primary settlement layer between central banks. So instead of moving gold around, they'll be moving Bitcoin around through the Bitcoin network. And the settlements will be in the billions, if not trillions of dollars in the future. Okay. So let's go back to the characteristics of money and then how Bitcoin fits into this. So, Bitcoin, and I've said this a few times, I'm just going to say it one more time, but in my opinion, is the best form of money humans have ever created. And the reason is because it has the primary characteristics of money. It's durable, it's portable, it's divisible, and of limited supply. Okay. But in addition to that, it has some added features. It's programmable. And what I mean by that is that eventually what's going to be able to happen is that if I want to color code my Bitcoin so it could only be spent in certain areas, I'll be able to do that. So for example, if I leave a legacy of Bitcoin to my children and I don't want them to spend it on Ferraris, and I could say that Bitcoin could only be spent at accredited universities. And so their children and their grandchildren, their great grandchildren, the only place they'll be able to spend that money, because it's color coded, is at accredited universities. And so it's programmable money. It's easy to verify Bitcoin, whereas like with other types of commodity-based money like gold, it's hard to verify. It's easy to store Bitcoin. You can store it on a ledger. You could self-custody the Bitcoin. If you memorize your seed phrase, you could keep your Bitcoin in your head and no one will know you even have it. There's no proof that you even have Bitcoin if you just memorize, the seed phrases. And one of the best things about Bitcoin, which a lot of the proof of stake blockchains don't have, is that it's immutable. And so what does that mean? That means once a transaction is completed on the Bitcoin network, it cannot be reversed. It's immutable. It's a permanent transaction, can never change. And some of the other blockchains are not immutable. Ethereum is a great example of that. About 6 years ago, someone hacked about $60 million of Ethereum through the DAO hack. And what the Ethereum Foundation did was they decided to carve that person out and say, we're going to start a new Ethereum, which is the ETH. And that person that stole the 60 million, they're going to be stuck with what's called Ethereum Classic today. And so, that's not an immutable transaction if the foundation could decide we don't like you and we're going to cut you out of our system. So, that's one thing Bitcoin, doesn't have to worry about. All the transactions are immutable, they're permanent, and they can never be changed. Okay, so let's jump into like Bitcoin as an investment. What's the opportunity here? So if we compare Bitcoin to other types of asset classes, the Bitcoin network, the cryptocurrency ecosystem, it's a little bit over $1 trillion. And if we compare that to the global payments opportunity, it's 8 trillion. Gold is 12 trillion. The M2 money supply is 83 trillion. And global bonds are about 123 trillion. And so one of the theses I have is that if you add all these different types of investments up and you throw in real estate, commercial real estate, all the other investment classes like stocks, rare art, collectibles, you come up with about $800 trillion of assets that are in the world that people store their wealth in. And so, in my opinion, Bitcoin was going to capture a portion of that $800 trillion. And I think it's going to be anywhere from 10%, maybe up to 50% of that 800 trillion. And when you do the math on that, you come up with Bitcoin being worth anywhere from, $4 million of Bitcoin to $20 million of Bitcoin in today's value. And as the governments print more and more money, that could even go much higher. So there's a tremendous opportunity here to use Bitcoin as a savings vehicle. If we go to the next slide, part of the pushback on Bitcoin is that it's not eco-friendly, it's not ESG friendly, it's bad for the environment, it uses too much energy, which is all false. So if we look at the actual stats on Bitcoin, it uses 189 terawatt hours of electricity out of a total of 162,000 terawatt hours worldwide. When you transmit electricity, when you create it at the power plant and transmit it through the electric lines, the amount of electricity lost just through the transmission is 50,000 terawatt hours. And the Bitcoin network is 189 terawatt hours. I mean, just the loss of electricity through transmission is multiple times more than what the Bitcoin network is. So the Bitcoin network is 0.1% of the worldwide electricity. So another way to say that, it's 0.0001 of the world's electricity. So if you turn the Bitcoin network off, it has no meaningful impact on electrical consumption. It doesn't save the world by turning off the Bitcoin network. So it's, this whole argument that Bitcoin's bad for the environment because it uses too much energy, it's just completely false. And when we look at the Bitcoin miners on the next slide, most of the energy that's used to create Bitcoin comes from renewable or green energy sources. Comes from hydroelectric, comes from solar. These are green energy sources. And if you compare that to the United States, about 20% of the US electrical grid comes from renewables, but about 50% or more comes from, in the Bitcoin network. So Bitcoin is much more green than the average US consumer is. And so this whole argument that, Bitcoin's bad for the environment, this is another reason that's false. And then if we just jump to the next slide there, Ash, if we look at the carbon emissions, the carbon output of the Bitcoin network, it's minimal. And we can compare that to tourism, playing video games, watching TV. If you flip the Bitcoin network off, it has no meaningful impact on the carbon footprint. And then there's also new sources or new companies that are actually capturing carbon behind the grid. So Crusoe Energy is one of those companies. What they do is they go in and they harvest, they go to the oil wells and, they take the flare gas that is normally just lit on fire and burned into the atmosphere. They capture that flare gas and turn that into electricity, and then they mine Bitcoin with it. They take a waste product and turn it into Bitcoin. And so that's actually good for the environment. You're taking that flare gas out of the atmosphere and that pollution out of the atmosphere. And, it's beneficial for the world to do that. If we take a look at go ahead, Brian.
I should add, I've actually had the Crusoe Energy guys on Real Vision, and it's a really interesting and compelling story. Finally, I should say, I've just recorded a conversation yesterday with Jamie Coots, who's done some interesting work on some of the points that you made here, things like excess energy, stranded energy, and carbon capture, mining technology. So that's an interesting conversation to be coming out on Real Vision in the next couple of days for, I believe, Real Vision Pro crypto members. I'm sorry, Brian, please.
Okay, no, that's great. If we transition like who's starting to adopt this technology, we see all sorts of companies. 10 years ago is very few, but today we got Fidelity, Goldman Sachs, Citigroup, BlackRock, JP Morgan. Jamie Dimon was on CNBC this morning, bad mouthing Bitcoin again, but his company is an authorized participant for the Bitcoin ETFs. So he's making money off Bitcoin. His daughter owns Bitcoin. It's just, I find it strange that he badmouths Bitcoin all the time. And, and you have to think like, what is the reason he's doing that? And just to make it obvious, the reason he's doing that is because JP Morgan is a correspondent bank, and JP Morgan generates billions of dollars of revenue by moving money around the world. And so if we look at all the transaction fees that are used to move our money around the world, we as humans, we spend about $2 trillion a year in transaction fees to move our money around. And some of that goes to JP Morgan. And this Bitcoin network, this blockchain technology, is I take that 2 trillion and it's a decrease it by 99%. Just like we don't use, film cameras anymore, we went to digital. Just like we don't go to Blockbuster, we use streaming now. Where I use blockchain technology and Bitcoin to move our money around the world, and we won't have to pay PayPal and JP Morgan and Visa and MasterCard to do that for us. And so that's why these companies and these CEOs are scared of Bitcoin, because they know it jeopardizes their business models. And so, when you hear like, Jamie Dimon bad-mouthing Bitcoin, you have to think, well, why is he doing that? He's doing it to protect his company, which I don't blame him for. But but Bitcoin's a better technology than a bank, than like JP Morgan. And so, and the marketplace has shown that. Bitcoin's market cap today is around $800 to $900 billion, and it's much larger than JP Morgan is. And JP Morgan's been around for about 100 years, and Bitcoin's only been around for 15 years. Okay, so let's get into the investment thesis for Bitcoin. Why would someone want to put Bitcoin into a portfolio? Well, we can go back to 2018, January of 2018. So was that 6 years ago? The Federal Reserve Bank of St. Louis said in their Bitcoin white paper, said Bitcoin will emerge as its own asset class and thus have the potential to develop into an interesting investment and diversification instrument. It's very important. So the Federal Reserve said this. This isn't, some Bitcoin, guru. This is like the Federal Reserve. The Federal Reserve says Bitcoin is a diversification instrument. So what does that mean? So what it means is that because Bitcoin is valued differently than stocks and bonds. So when we value a stock, we look at PE ratios, we look at price to book. When we value bonds, we look at credit risk, we look at duration, we look at interest rates. But when we value Bitcoin, we value it on network value. We use Metcalfe's law. We use stock to flow models to value Bitcoin. There's all sorts of other ways that are different to value Bitcoin than we do with stocks and bonds. So if you add in a small amount of Bitcoin to a diversified portfolio, it increases what's called the Sharpe ratio. The Sharpe ratio are the risk-adjusted returns in a portfolio. So if you just add a little bit of Bitcoin to a portfolio, it increases the risk-adjusted returns. And so what does that mean? That means that for every unit of risk I take, I'm getting more units of return. And that's what CIOs and that's what fiduciaries, that's what their primary job is. Their primary job is to maximize the risk-adjusted returns on an investment portfolio. So in my opinion, I think these CIOs and these fiduciaries are violating their fiduciary responsibility if they don't add Bitcoin to their portfolio. Okay, and then so let's go through the data that shows all this. If we look at Bitcoin over the last 15 years, it's been the best performing asset class 12 out of 15 years. Okay, so it's like there's nothing to argue, right? It's better than stocks, better than small cap stocks, better than bonds, it's better than emerging markets, better than cash, 12 out of the past 15 years. Right? If we go to the next slide, these are the risk adjusted returns. So if we take a look at a typical portfolio that's 60% stocks and 40% bonds, that portfolio averaged, okay, I'm gonna have to get my old man eyes out here. So that typical stock portfolio averaged about 6.6% over the past 10 years. Okay. And the Sharpe ratio was 40. If we just take 2% out of stocks and add that to Bitcoin, so you have 58% stocks, 40% bonds, 2% Bitcoin, the performance goes from 6.6% to 8.51%. Or excuse me. Oh, so I just updated this chart earlier today. I messed that up. It should be 9.2%. So if you look at the Sharpe ratio on that, it's up 55%. So what this shows is that a small amount of Bitcoin added to a portfolio increases the Sharpe ratio, increases those risk-adjusted returns. And like I said, that's what fiduciaries, that's what their primary job is to increase the risk-adjusted returns. And Bitcoin does that. BlackRock put out a study about 6 months ago showing, what's called the efficient frontier. Like what's the best percentage that a portfolio should have of Bitcoin? What's the efficient frontier of Bitcoin? And it showed that, and this is BlackRock saying, this is not Brian Estes. BlackRock said in their report that the optimum amount of Bitcoin in a portfolio is 84%. That 84% of your portfolio should be in Bitcoin, and the other 16% should be in stocks and bonds.
All right, Brian, let me jump in.
Okay.
Obviously I'm broadly very much sympathetic to the thesis here, but it's my job to ask skeptical questions. Let me ask us a couple skeptical questions here around this. So, this notion that even if one believes that Bitcoin is unstoppable over the longer term, nation states have the ability certainly to slow this technology down in terms of adoption, and therefore put a ceiling or a damper at least on price appreciation. I'm looking at this chart right now, and I'm looking at the old data. This is from the October 10 data, 2023. But it is extremely compelling when you look at the Sharpe ratios and when you look at the compounded annual growth rate. So one of the things that I often worry about when we have these conversations, if you look at the conservative portfolio with a 2% allocation to Bitcoin, clearly improves the Sharpe ratio and doesn't, it increases the volatility, annualized volatility of the portfolio by about a third of 1 percentage point, and maybe the maximum drawdown it deteriorates at like 2%. While improving the compounded annual growth rate, I'm doing this math in my head, around 2.5%. So a very compelling case. Do you worry about the risks that people are going to get over allocated to Bitcoin? That someone is going to hear this conversation, get really enthusiastic about this, and want to put 80% of their liquid assets in Bitcoin. At the end of the day, the reality is people in crypto love to talk trash about fiat currency, but the reasons that U.S. dollars have value is because at the end of the day, U.S. citizens all have to remit their taxes in U.S. dollars. So there's an enormous amount of organic demand. Preferences can change, prices can rise and fall with all risk assets. So you get concerned about people being over allocated to Bitcoin and not therefore able to meet their either short-term obligations or to have risk in the intermediate term if there is a significant drawdown that lasts years.
Okay, so that's a great question. So I should have said this earlier, but let me. So we're a registered investment advisor with the SEC, and I should have put out the disclaimer before I started going through this, and I forgot to do that. So I'm gonna give the disclaimer now, and then I might answer your question. So the disclaimer is what we're showing here at this presentation. This is for educational use only. This isn't financial advice. Okay. So now I might answer your question, not giving you financial advice, but, for education use. So it's important to understand the difference between dollars and Bitcoin. So dollars are used for currency transactions to go buy things with. Bitcoin is a savings technology. So you take your excess dollars that you don't need to spend, and you need to save those somewhere. So you need to save them on things that can't be printed. So land can't be printed. So, buying real estate, I think is, usually a pretty good way to store your wealth. Um, Investing in stocks, that's a good way to store your wealth too. The government can't print more Apple stock. And in fact, Apple takes their free cash flow and buys back their own stock, which reduces the float, which makes the remaining shares more valuable. So, owning, and I'm not recommending Apple, I'm just giving that as an
As an
example.
example. And by the way, simultaneously decreases their position in US dollars.
Right, exactly. And so Bitcoin, I think of Bitcoin the same way. I think it's a way to store the value for your excess dollars. And let me stress excess dollars. This isn't something that you want to take next month's mortgage and put it in Bitcoin, hoping you're going to double it. It's not gambling. This is long-term savings technology where you take your excess savings and you have to store it somewhere for the long term, and you plug it into Bitcoin. What I recommend people is just dollar cost average, help smooth out the volatility, and do that for the long term. And that's what my daughter does. My daughter takes, she uses Venmo, and she takes $100 a week and she puts it in Bitcoin through her Venmo account. And that's her savings account. That's her long-term savings account. And, I'm glad she started, a couple of years ago. She's 25 now, almost 25. And, hopefully by the time she's 50, that she'll have saved up a lot of money, just doing it periodically, saving $100 a week, instead of spending that on frivolous items. So I hope does that answer your question?
It does. I think
Okay.
it is important. It's also important for people to understand another point that I would make, talking about risk and the notion of excess dollars. If you're doing something like saving to buy a house and you're going to need a down payment in 24 months, if we know the history of Bitcoin, that the max drawdown has been decreasing, but the max drawdown on the most recent bear cycle was something like 80%. If that's money that you think you're going to need in a reasonably short period of time, say 24 months, what would your advice be about how people can think about the percentage allocation to Bitcoin? Because it seems to me if you're investing in Bitcoin and it's money that you're going to need in 2 or 3 years to buy a house, there's a significant risk there.
Yeah, I wouldn't. Yeah, a 2 to 3 year time horizon, I would just keep it in dollars. Yeah, if it's, if this is money that's you're setting aside for 10 years, 20 years, 30 years, then you want to save it in Bitcoin. But if it's less than 2 years or less, no, you want to save in dollars to mitigate that volatility. Yeah, Bitcoin could drop 70 to 80% anytime. So most people you don't want to take that risk. Yeah, you want to like I said, in my opinion, people shouldn't take that risk.
Yeah.
And I was a financial advisor for 23 years. And I saw things like that happen to people where they saved up for their kids' college for like 15 years. And then the year that their kid goes to college, the stock market drops 40%.
Right.
Right. And like, well, what do you do then? So what I was recommending they did, which they didn't do, was you want to be more conservative as the time gets closer to when you spend the money. So if you're 2 years out, you want to be kind of the most conservative with that money.
Yeah, and by the way, not to beat up on Bitcoin here, but you're absolutely right. That certainly happens to people with U.S. equities all the time. They're overinvested in tech stocks, for example, with money that they plan on putting a down payment down on a house or paying for college or something like that. And there's significant volatility. I mean, the strange thing about the performance of price on Bitcoin, I've got it on my screen right now. 5-year return on Bitcoin is over 1,000%. Simultaneously, 80% drawdowns in Bitcoin are not infrequent. So it's kind of like balancing those two things in your head at the same time, particularly when you're talking about things like time horizons.
Mm-hmm. Yeah. All right. So we have about 5 more minutes and we'll be wrapped up here. So, just to give everyone a little heads up. So what we're going to talk about next are the cycles of Bitcoin, like you just mentioned. It has these drawdowns. Well, what causes the drawdowns? Well, they're built around the Bitcoin halving cycle. So these purple columns here are the 12 to 18 months after a Bitcoin halving. So that's what we talked about earlier. Like, every 210,000 blocks, which is about every 4 years, the reward of Bitcoin gets cut in half. And if you cut the reward in half, so there's fewer Bitcoin hitting the market and you have the same amount of demand, then the price goes up. And so about 6 months before the halving to 12 to 18 months after the halving, that's really the best time to be invested in Bitcoin. And we're in that window today. So the next halving should be in April, or it's going to be in April. And so between now and 12 to 18 months after that is a good time to be exposed to Bitcoin. And then what's happened historically is you have a crash after that. So if we go to our models next, how do we determine the value of Bitcoin? This model right here it's our most basic analysis. All we do is take the historical price of Bitcoin, plot it out on a logarithmic scale, and run a regression line through the center of that. And so it's just trend analysis. But even though it's basic trend analysis, it is 88% correlated to the historical price of Bitcoin. So it's actually a really good model. And what this model says today is that Bitcoin should be worth about $120,000. And it's trading for what is it, 42, 43,000. So it's, this model says that Bitcoin's very, very undervalued today.
That's currently, it should be worth 120 based on this.
It should be worth 120 today.
Based on this model.
Yeah. And all right. And so when I say today, I mean, when we ran this, so this was run on November 10th. So this is about 2 months old. So the trend's actually a little bit higher than that today. We just updated the chart yet. The next model that we use, Plan B, came out with what's called the stock to flow model a few years ago. So basically what stock to flow means is you're comparing the stock, which is all the amount that has ever been created, divided by the flow, which is the new creation. And so to give you some real world examples here, gold today has the highest stock to flow ratio. That's what makes gold the most valuable asset in the world today, because it's the most scarce. So if you take all the gold in the world and divide it by the amount of new gold that gets mined every year, that stock to flow ratio is around 60 to 1. Bitcoin's stock to flow ratio today is around 58 to 1. So it's a little bit less than gold. But in April, what happens is that the flow gets cut in half because of the halving. And so Bitcoin's stock to flow ratio goes from 58 to 1 to 116 to 1 in April. So what happens in April, for the first time ever, is that Bitcoin will be the scarcest asset on earth. And if the total gold supply is worth $12 trillion and Bitcoin's worth about 1 trillion, then you would think that Bitcoin's would be worth more than gold and it should go up 12x. And in fact, since it's almost double the scarcity of gold, it probably should be almost double that. And so that's what this model measures. So this model says that Bitcoin should be worth about $100,000 today. In a couple of years, it should be worth $1 million of Bitcoin. And around 2030, it should be worth about $10 million of Bitcoin based on the stock to flow model. And this model is very, very accurate. It's 94% correlated to the historical price of Bitcoin. And so, take it for what it is, but I think this is a pretty accurate model. And I think what's wrong today is not the model. I think the price of Bitcoin is wrong. I think Bitcoin should be worth $100,000, should be trading at $100,000 today. And the reasons it's not is because of the failures that happened over the past year with FTX, Genesis, Gemini, BlockFi, Celsius, Three Arrows, all these blow-ups, these bankruptcies that occurred, tarnished the brand of Bitcoin. And then you add on top of that, Elizabeth Warren talking about how Bitcoin's used to fund Hamas and how Bitcoin's used for nefarious activity. which is all, it's provenly not true. And, and because there's such a negative connotation around Bitcoin today, that's what's holding the price down. But eventually what happens is that the model will reflect the true price, and Bitcoin, as people understand that, that misinformation's not true, they'll be more apt to, pile into Bitcoin, which will cause the price to go up. Okay. The next model that we have is the same stock to flow, but we take out dollars and we use gold as the monetary unit of measure. So what this model says is that Bitcoin should be worth about 100 ounces of gold today, and it should be worth about 1,000 ounces of gold in a couple of years, and about 10,000 ounces of gold in 2030. And right now, Bitcoin's trading for about 17 ounces of gold. So this model is another confirmation that, Bitcoin is undervalued, not only in terms of dollars, but in relative terms to gold also. And then the last model that we use is the Metcalfe's law. So this one has been a little bit sticky lately. We're trying to figure out why this one isn't reflecting the same information as the other models are. And we think we figured it out last month, and we're trying to gather the data to prove this. So what this model measures, if you square the number of users on the Bitcoin network and multiply that times the transactional value going through the Bitcoin network, we get a model price. And when we compare that model price to the actual price of Bitcoin, they're highly correlated. But what's happened lately is that they become uncorrelated. And we think the reason is because the model isn't picking up the transactions on the Lightning Network. So we think that a lot of transactions have gone off layer 1, and now we're on layer 2 Lightning Network. And this model isn't reflective of the number of users and the transactional value. And so we're trying to gather that data to plug that into the model to see if it is more reflective of what the other models say. Okay. Last couple of slides here. Talking about regulatory issues, people are always saying, well, the government's on ban Bitcoin, right? I'm not getting involved with it. Well, the SEC has just approved the Bitcoin ETFs. Gary Gensler, who's the chair of the SEC, has publicly said the SEC has no plans to ban crypto. Jerome Powell, the Fed chair, says no intention to ban them when he's talking about, crypto. And Brian Brooks, the former comptroller of the US currency, has said nobody's going to ban Bitcoin. So the reason they say that is, if you go to the next slide, the reason they say that is because they can't ban it. The reason Bitcoin cannot be banned in the United States is because it's protected under free speech. It's protected by the First Amendment. And so this goes back all the way to 1996, before there was Bitcoin and before there was blockchain technology. So Bernstein was a university professor who developed some cryptographic software. He wanted to export that outside of the United States. And the Department of Defense said, this is military grade software that we don't want exported outside the US. And Bernstein was like, well, it's my right to export my software to where I want to. So it actually went to court. And so the Department of Justice, so Bernstein sued the Department of Justice and said, I want to export the software. And the judge came back and said, you could export it because it's speech. It's protected language. Software is speech. Software is no different than German, French, music, or mathematics. It's a way to express something. And we have freedom of expression in the United States, covered under the First Amendment, covered under free speech. And so the courts have already decided that cryptographic software, specifically Bernstein software, but this applies to Bitcoin because Bitcoin is open source internet protocol software. It's cryptographic software. And so Bitcoin cannot be outlawed in the United States, and because it's protected speech. And some could argue that because it's military grade software, cryptographic software that's also protected under the Second Amendment, under freedom to bear arms. And so there's a strong case for the Second Amendment, but there's a proven case already and precedent set that it's protected under free speech. And then the very last slide we have here is just to summarize, like why do you want to add Bitcoin to an investment portfolio? So we talked about it increases the Sharpe ratio. It's the next new mega trend based on the S-curve analysis. It increases the portfolio performance. It's a completely misunderstood asset class. Like we said, only about 1% of the world understands this today. So, as the other 99% of the world comes to understand what Bitcoin is, they'll probably make allocations to it. And then the last point is that it's protection against economic uncertainty. And what I mean by that, it's protection against the money printer. As the US government and governments around the world print more and more fiat currency, it's going to dilute the purchasing power of our existing dollars. And so we need to put those existing dollars in other places to protect them from that money printer. And that's what Bitcoin is. It's savings technology. It's a way to take our time, our effort, and our skill that we use to create money and store it in such a way that it can't be taken from us, like the dilution of the fiat system steals from us.
Brian, fascinating presentation. We've got a couple of questions from the audience. If you have a couple of minutes,
Okay.
ready to
Sure.
jump in. First one comes to us from Gary, whose question is Bitcoin cash, currency, or an asset, or all of the above?
So it depends on where you are. So in the United States, because the conversion of Bitcoin back into dollars is taxable, and you have to report that to the IRS on a Schedule D, we really can't use it as currency in the United States because it's such a cumbersome, thing to report every single transaction to the IRS. So, but outside the US, Germany, Portugal, Switzerland, Hong Kong, Singapore, Bitcoin's tax free. So, Bitcoin could be used more easily as currency in those countries. So I would say Bitcoin in the United States is more like cash, and it's more like an asset. It's basically digital property. I think the closest thing you could say Bitcoin is a digital form of gold.
Here's a question that comes to us from Marty. I believe that Bitcoin is a great technology for the future. He says, my concern is the security. How will the security be maintained as quantum computing gains wider usage? Great question. Above my pay grade as a technologist.
Yeah, it's above my pay grade too. So what I did is I went and asked Jeff Garzik about this. So if you don't know who Jeff Garzik is, he was one of the first developers that worked with Satoshi Nakamoto to debug the Bitcoin system. So there were 7 core developers on the Bitcoin network, and Jeff was, I think he was number 3. So I went to Jeff and I asked him, I was like, so what about this quantum computing thing or risk? And so he said, the way he explained to me is that what protects the cryptography, the Bitcoin network, it's called SHA-256 cryptography. And so if quantum computing ever put SHA-256 cryptography in jeopardy, they would just turn the switch and switch it from SHA-256 to SHA-512. And then it takes more and more energy, exponentially more energy, to break the SHA-512. And then you could turn it up to SHA-1024 and SHA-2048. And he said, eventually you turn up the cryptography so high that there's not enough electricity in the world to break the code. And if you turn it up high enough, there's not enough electrons in the universe to break it. And so that's what gives me comfort that, quantum computing is not a risk because the developers will just increase the cryptographic, security on the network by changing the from SHA 256 to SHA 512 to 2024 and so on.
Really interesting. Gary, by the way, who asked that last question about cash, currency, or assets, says, great answer. Thanks, Brian.
You're welcome.
Brian, fascinating presentation here today. Great piece of education, really fits the bill for what we're doing this week here on Real Vision. Obviously, I should say it is education, not financial advice. Final thoughts, key takeaways that you'd like to leave our viewers and our listeners with from today's show.
Yeah, what my ask is for everybody, and you're doing your work already by listening to this webinar, but the ask is, it took me about 40 hours of research and understanding and digging to figure out what Bitcoin is. It doesn't come naturally, and if you haven't put the 40 hours in, my recommendation is put 40 hours of work in. And I know we're all busy and we have other commitments, but this is very important technology that we all need to understand. And so put the time and effort in, and, to understand what Bitcoin is, and put that 40 hours in so that you can come to where I went from skeptic to believer, by understanding what this is and how important this is. You don't want to listen to me. You don't want to listen to Ash. You want to understand it for yourself. And so put the time and effort in to understand why Bitcoin is so important, so that you could use it to better enhance your life.
Yeah, very well said. Do your own research as always. Brian Estes, always enjoy these conversations. Always enjoy when you join us here at Real Vision. Thank you so much for coming today.
Thanks for having me, Ash.
Thanks for watching and for listening, everybody. Have a great afternoon.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.